Fifth stage in the impact framework is called cash. The cash section is focused on improving the financial stability of the business, whether that's increasing how much cash you've got in the bank, to improving the balance sheet value and long-term solvency of the business. The sole reason a business will fail is because it runs out of money. Give it unlimited funds and it will keep trading despite how good the business model is or what external factors it might impact it. There are 5 key reasons a business will run out of cash. 1, lack of profit, such as through price wars or one bad contract. Illiquid assets, such as stock, property, product development. 3, overtrading, too much growth too quickly. 4, too much debt. Or 5, bad management, such as credit control, lack of diversification. Hopefully throughout this program, you'll learn multiple strategies to get around these issues. My intention is to highlight potential issues to you, and hopefully by hearing them, it will set alarm bells ringing so you can take the actions you need to in your own business. So one of the first things to have in a business is a cash flow forecast. This gives everyone a clear picture of what's happening, as well as any potential hole in the bank account in the coming few weeks. Sharing this information with all staff will help them also see how their decisions and actions impact the whole business. It's surprising how many people view this concept as common sense, yet the majority of them never do it. Do you know what your working capital cycle is and how you might reduce the amount of cash the business needs to trade effectively? Could you change your business model, reducing how much working capital you need in the business? One thing I see in certain industries, particularly construction, is firms like to take on as many contracts as possible, but never seem to get any of them complete. I don't know if this originates from fear that they'll run out of work or something else. What this means, though, is that it takes much longer before they can fully invoice for their part of the work. They have huge numbers sitting in their work in progress. I was looking at such a company a few months ago, a company that came to me looking for investment to fill that gap in their cash flow. And this company had 120% of its previous year's revenue as work in progress. Yet they'd only grown revenue by about 5% from the previous year. Some firms, depending on the motivation, will wildly under or overestimate the value of this work in progress in their accounts as well, especially if it's valued by a site agent or someone that is motivated to change the numbers, if you like, someone who wants to reflect a better position than is actually the case. So work in progress is just the same as stock. It's dead money until you're paid for it. Apart from having dead money sitting in the business, there's also all of those operating costs associated with that. They also need to be financed, which reduces your profit margins, further reducing the cash in the bank. If you have ongoing contracts or clients that haven't been invoiced yet, work through and dedicate resources towards getting them advanced as much as possible and as fast as possible. And then audit how work in progress is valued so that everyone works from that same page. You don't want to have a multiple contract sitting in your work in progress and then find later on that they've all been overvalued. So you're not actually getting as much money as you expect. In my previous life, I've been involved in court cases that took on average 4 or 5 years to get to the conclusion, in the end resulting in huge legal fees for us to pay, regardless of us winning the cases. And this sometimes made the win irrelevant, as the legal fees were so high and the time cost of the money involved, with it taking so long to receive. Yeah, I've since learned that there are much faster methods to gain payment that most of that kind of chaser industry, they aren't open to sharing with you, but it's these methods that I adopt now. But before we get to the debt collection, there's a process every business should go to or should work to, which increases the likelihood of receiving payment before it reaches that debt collection stage. First is credit checking clients and allotting credit terms. Getting signed purchase orders from authorized personnel. 2, identify the payment approval process. How do they approve the invoices? Identify authorized personnel for invoice approval. So identifying who is actually authorized to approve the invoice. Taking an upfront form of payment or some kind of security. Interim invoicing, if more than 1 month is or if it's going to take more than 1 month. Invoicing immediately after completion. So instead of waiting till the end of the month, it's invoiced on that day you complete it. Call the client, say the invoice has been sent, did you receive it? So you confirm with them whether they've received it or not. 2 days before the due date, call and ask if everything is still on track for payment. And if not paid by 24 hours after that due date, call and find out the reason why. And then every 5 days, continue calling, following up with that phone calls, and then follow up with an email. Aim to get part payment, and this reinforces their admittance that they owe that debt from a legal perspective. And if there's still no progress, then move it to legal process. The faster that you can move it down that path, otherwise it will just get kind of kicked down the road, and the longer it takes to get to that stage, you're then going through that official legal process then, but you have to go get that initial stage kind of out of the way first. Otherwise, it just pushes it further down the line. And then everything discussed on the phone, you should always be copying it to email to maintain that paper trail. Although someone actually told me, a legal person told me that the emails aren't actually legal. They aren't legally binding because anyone can access it. So your 5-year-old child could access your emails and send an email to say, I want to pay you however much money. Whereas if it's a official letterhead that's been signed by you, then that's a different story. So this checklist comes from years of being burnt by people that believed that they had a right to take something from us, yet never pay for it. If you're poor at converting work orders into cash, this is one area that you need to focus on. Many small business owners, this can be a large source of frustration and a lot of stress. The problem with chasing debt, which I found from personal experience, is that sometimes the chaser, I'm calling them the chaser, but I mean a debt collector, is that they are paid based on how long they spend chasing it. Not all of them, but some of them are. If it takes them 1 day, they'll only be paid for 1 day. But if it takes them years, then they'll be paid a lot more money.